India. My name is Rajashekar Kongari, Equity Research Analyst, part of MarketSmith India team, which manages model portfolio. Before we go ahead into this podcast, the disclaimer is registration granted by SEBI, membership of BISL, and certification from NISL in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. It is very important to understand Nifty's daily price volume action to gauge the market, how the market is placed at the current moment, and also have a view on the market going forward. Last week, we have seen two distribution days being added to the index and one distribution day being expired in this week. Currently, distribution day count is two. Sorry. Further accumulation of distribution days signifies there is a significant weakness in the market. However, distribution day count at 2 is not a major sign of cautiousness. If you look at the Nifty's absolute level, currently it is trading. Yesterday it closed above 25,000 level, and it is trading very near to the all-time highs. And also, it found very good support at its 21 DMA recently. It's the green line here. So going forward, 21 DMA is going to be a crucial level, and also 50 DMA is very close to the 21 DMA. So those two levels are going to be acting as good support for the markets going forward. But if those levels are breached on higher volumes, so we can expect further selling in the market. But going by the circumstances, which is less likely to happen. On the market status front, we are still in confirmed uptrend. And if there is any accumulation of distribution days from here, and if Nifty breaches 50 DMA, we might change the market status to under pressure. You can see here in this recent sell-off as well, Nifty didn't breach its 50 DMA, even though it breached its 21 DMA. So 50 DMA has been a historical very good support for the market, and that is going to be a crucial level to be tracked going forward as well. Coming to the model portfolio, we have already having a good number of stocks in the portfolio already, and we have added two lists to the portfolio. One is a growth oriented list, and other is long-term focus list, where our risk and reward are slightly on the higher side, where our expected reward is normally on the 20 to 25% range, but on the long-term focus list, reward is expected around 40 to 50%. But on the risk side also, it is slightly elevated more than 8%, which is a normal stop loss level. Some of the stocks which are in news and which will be under radar in the today's session. One is Uco Bank has increased its lending rates by 5 basis points for some of its loans starting from today. So interest rates will increase from the Uco Bank. And apart from that, Oil India, ONGC, and Bidesh India has signed memorandum of understanding with an UAE company for global cooperation in the critical mineral supply chain. Brent crude oil prices have fallen below $70 per barrel for the first time since December 2021. Ramco Systems has announced the launch of Aviation Software 6.0 for smarter aircraft management. Tata Motors finance merger with Tata Capital gets CCI approval, so we might see the merger happening very soon. These are some of the stocks which are in news. For the global market update, US market closed mixed. You can say Nasdaq, which is tech heavyweight index, has closed more than 0.8% higher, whereas Dow Jones and S&P, which have mixed sectoral weightages, have closed in the negative territory. Asia markets, as we speak, are trading in the negative territory. Kospi is trading with a minimal gain of 0.1%, whereas Shanghai and Nikkei are trading with a decline of 0.8% both. GIFT Nifty is indicating a muted opening for the Indian market. So we might see an Indian market Nifty opening around 25,000 level and hovering around that level in the current trading session. For the chart of the day, we picked Blue Star. Ratings wise, it is looking very good. Base pattern has also been very good, but only thing is it's a late stage base, stage 4 consolidation base. Apart from that, it is looking very good. Stock is forming right side of the base pattern and it is still 5% to the pivot. Volume has also picked up during the right side of the base formation, which is a very good sign. Number of funds have been consistently increasing for the last 4 quarters, which is a very good sign. Sales have been consistently going at nearly 20 to 30%, which is the growth rate we are looking at. And BPS side, we are looking at higher growth rates, apart from just except for March quarter, where it's seen dip in the profits. Otherwise, it has been a very good earnings for the company. Ratings, if you look at EPS, has been very good at 93. This is majorly because of exceptional consistent growth rates. Price strength has also been very good at 76, and price strength has been improving also with respect to the stock's price action. A by D rating has also been very good at A minus, which is indicating good amount of accumulation. You can see here most of the above average volumes have been blue bars, indicating good amount of accumulation happening in the stock. Overall, it is looking very good. We can consider stock, but the only thing is it's a slightly late stage base. But apart from that, it is looking good. If you are already taken position, you can continue to hold it. 50 DMA has been acting as a good support, so you can keep that level as a stop loss. Thank you for joining today's pre-bill. Have a good trading session.